This video is on the topic of business functions and processes. You'll see from the slide it's part 2 of 2. There are 2 videos introducing business functions and processes, and this is the second part. These are quite straightforward videos. They are not very demanding. They simply set up the framework within which we will get on to analyze business functions and processes in much more detail in other videos on the course. But it's important to have a framework within which we can see business functions and processes, and these 2 classes are attempting to provide an insight into that framework. So let's start by looking at strategy. Well, according to Chandler, strategy is the determination of the basic long-term goals and objectives of an enterprise, and the adaptation of courses of action and the allocation of resources necessary for carrying out these goals. So it's the determination of long-term goals and objectives. That's the idea of strategy. It's long-term. It's almost aspirational. It's aiming to the long run. And sometimes the strategy is caught up with the mission statement of the organization, which was been really the subject matter of the previous video in this set of 2. But the mission statement is it simply states what the organization wants over a particular period of time, perhaps over the next 10 years or the next 5 years. It talks about its place in the market, the type of product it will be producing, its reputation, and that sort of consideration. So organizations have strategies. That's a basic requirement. They must know where they're going. Now, management needs to consider the company's financial performance. It's certainly the case that the company will not go very far unless it's producing the resources, the financial resources, to enable it to achieve its planned objectives. How to improve its long-term competitive position. By and large, companies exist in competitive situations. There is competitive rivalry, and they will be struggling to anticipate the actions of their competitors, to anticipate them and to outmaneuver them in the marketplace in terms of customer satisfaction, product design, delivery, reputation, and so on. So they will look to grow the business. They want to grow the business so that it has a more prominent position within the market. But it'll also want to meet customer demands, and that's how to grow the business. In a sense, these 2 are so intricately related. They're almost a single objective. They need to meet customer demands because it's the customer who will buy the product, who will enable the business to achieve the revenues that will enable it to make the profits, to make sure it achieves its strategic objectives. So the growth of the business and meeting customer demands overlap almost completely. They must compete successfully within the marketplace. They must be able to adopt strategies which enable them to successfully compete and outmaneuver their rivals. They must provide good customer satisfaction, they must enjoy a good reputation within the marketplace, and they must be able to do this easily and competently. So they must be able to improve the organization performance. They must be able to measure the performance for a start to see how well it's doing, and they must be able to benchmark that. It's pointless picking up statistics and figures on the performance of the organization if it doesn't have a benchmark, if it doesn't know what is good or what is bad. Now, the benchmark may be against previous performance over previous years, or it could be a benchmark against industry standards, if that is possible. But one way or the other, it needs to monitor its performance and to improve its performance, but it needs to also to work out how well it's doing, and to that end there should be some appropriate benchmarks in place. Now, a strategy provides a roadmap for the organization. It determines the business purpose, its goals, future aspirations, its resources, its competencies, and its competitive advantage. So it looks at a wide range of characteristics of the business, or of desirable characteristics of the business, in terms of, let's say, the ability of its workforce to work under demanding conditions and under changing conditions. Look at the performance of the marketing department in terms of its market position. Look at its aspirations to ensure that they are realistic and they can be achieved. So it's making sure that there is a sense of direction for the organization, and that sense of direction is achievable. A strategy is an assessment of a business and its capability to compete in a competitive market and its likelihood of achieving its aims and objectives. So the idea of a strategy is to ensure that the organization has a direction and that it has the capability of achieving what it says. If it's not, then it's setting itself unrealistic targets. And that can be frustrating for management because they can't achieve those. So it must have the capability of achieving what it sets out in its strategy. And the strategy itself should give clarity to the management in terms of the direction of the business. A strategy takes into consideration task completion, current control systems, limitations of resources, and the impact on the organization structure. So a strategy really impacts on most parts of the business. This is where the organization is going. This is what the organization aspires to. So it looks to have tasks completed. It looks to have the control systems in place to monitor and effectively run the business. It looks at the limitations of resources, and limitations are something that we all confront. It's the economic problem. So organizations will have limitations in resources and will need to use the available resources efficiently. So it needs to have a structure which is not wasteful, one which optimizes performance. And that should be caught up, all of that should be caught up in the strategy. The strategy should recognize all of these issues. Now, the functional areas of a business, well, we can start with the board of directors, the senior management, and then we can see it in terms of functions. Production, that's a function that needs to be performed. Marketing is a function that needs to be performed. There should be financial management and an accounts section which should look after the resources of the business and should have good stewardship accounting. Human resources, looking after the people who work in the organizations, and customer service. Now you can imagine in some organizations these functional areas being extended. For example, research and development, product development itself, all sorts of other areas, perhaps an IT section, which is a functional area, which provides communications and makes sure that the more technical parts of the organization are optimized as well. So we can imagine the functional areas being somewhat different to what I've got here, but they will be related to the nature of the product and to the size of the organization. So production, well, production is just the stocking of raw material, quality standards, monitoring production, and assembly of finished goods and products. Production is transforming the inputs into the outputs, the direct transformation of inputs into outputs. Marketing is to do with market research, marketing mix, promotion, product development, internal and external auditing of the business. It's also to deal with the customers, after sales service, the perception of the customers of the business, the image of the business, and the general promotion of the business, and the appropriate ways to promote the business. Human resources, well, recruitment and selection, motivation and reward, employee performance, training, development, and employee welfare. So human resources should ensure that the right people are in the right places at the right time. People with the right skill sets, the right competencies, the right abilities, they should be in place, and they should be adequately rewarded and motivated. Customer service, well, dealing with customer complaints and feedback and after-sales service and problem solving. Customer service is important. It facilitates the promotion of the business within the market, the reputation of the business, and the way the business deals with its customers. The accounts will be bookkeeping, payroll, budgets, financial reporting, and capital expenditure. It'll deal with the bank, it'll deal with shareholders if need be, it'll deal with the calculating dividends, it'll deal with the financial management of the business, making sure the business is on a sound footing. Functional areas play a key role in strategy. Each department produces functional objectives in order to achieve corporate aims. So we can see the business in terms of the functional layout, the different functions that we've just mentioned, production, accounts, HR, and so on. And each of these will have functional objectives. And those objectives should be in line with the corporate aims of the business. So the objectives that are being pursued on the functional basis, on the functional areas, these objectives subscribe to the overall aims of the business. And of course the aims of the business are based on its strategic plan. So we can see the business following quite a neat line of logic, from the strategy of the business through to the broad aims of the business to the objectives of each of the functional areas. An organisation structure needs to be carefully considered. A structure defines the organisation and its purpose. It must coincide with the aims and objectives. So the structure of the business must be in line with the aims and objectives of the business. If it's not, there's going to be a clash between the two. There are contradictions being factored into the business, which will lead to inefficiencies and confusion, and could lead to even more major problems about control and the organisation of the business in terms of its general management. So it's important that the structure fits with the purpose of the business. What is the business making? What's the product? What's the market? What's the right way to go about making this particular product? And if there's duplication of function or overlap of function, there can be confusion amongst the management. The line management indeed can be confused as to whose responsibility it is to do certain functions. There should be clarity throughout, clear demarcation of functions. So the types of functions will be a function of the type of product and the type of industry the company is in and is dealing with. Structure ensures that an organisation can efficiently communicate between different areas of the organisation. So it's important that the structure, having been worked out, there should be good channels of communication between the various functions. So they're able to, in a sense, pass the work in progress from one part to the next. And all parts of the organisation should know what is currently under production, what's currently going through, the timescales, when it will be completed, so that the marketing section, for example, can tell its customers as to when, and organise delivery, and logistics can be notified, and so there should be good communications between the different parts. And the functional flow of the business, in terms of the flow, in terms of the, let's say, the production flow, it should be organized to run smoothly, fitting one into the other, without wastage, without hold-ups. A structure must facilitate the aims, objectives, mission and purpose of the business. The structure should underpin everything that has been stated within the mission statement, within the strategic plan, and it should enable the objectives to be completed and completed efficiently. So each of the functions will have objectives, and they must complete those objectives. The objectives can meet the SMART criteria. They should be, for example, achievable, and it should be realistic, and it should be time bound, and so on. But they should then also subscribe towards the achievement of the aims of the organization. And once the aims of the organization have been achieved, then the mission of the organization will have been achieved. So there is congruence between mission, aims, objectives, and functional design of the business. A structure is dependent on the following factors. The purpose and mission of the organization. Well, the purpose and mission of the organization will determine the structure. How the company is laid out, how the business is laid out. It must fit in with the achievement of the mission. And there are different designs according to what the company is attempting to look at. We'll look at a few later on in this particular session, but we can imagine different structures for different missions. Look at the size also of the market: local, national, international, global. Sometimes if a company is operating just supplying a local market, it doesn't need an elaborate structure. The structures can overlap significantly, or maybe combined, because perhaps a smaller organization is required. Whereas an international organization may have very discrete functional demarcation, and this will require very clear management to ensure that there is continuity of production, that production flows from one function to the next. But there may be many functions. It's not just simply saying production, but production may be broken up into many functions itself. So how it operates and its activities will also determine the structure, the type of technology it uses, the type of processes it engages in. This will determine the type of structure. It depends on the conditions of supply of raw materials and components, as to whether there's a store or whether the items go straight into production, if it's a JIT policy or that's been pursued, or whether they're using batch production and putting it into stores. So all of this will start to determine the structure of the organization. Stakeholders also partially determine the structure and organization of the business, because the stakeholders can be everyone from the community right through to the shareholders, to the workers, to the management, even down to the customer. Everyone, in a sense, is a stakeholder in the business. They've all got an interest in the future of the business. And the stakeholders' requirements will determine the functions of the business. Businesses, for example, may change their functions because there is pressure from lobbyists within the community for the company to have greener credentials, to produce the product in a more efficient and environmentally friendly manner. It could be that the local community are worried about the amount of traffic going to and from the organisation, and may require the organisation to make changes in its delivery patterns. Um, it could be that the customers want the product updated on a more frequent basis to be kept in line perhaps with what the competitors are doing, and also in terms of the fashions and trends within the society. So there are all sorts of issues that get caught up with an analysis of the stakeholders' requirements that can influence the structure of a business. The culture of the business, well, the, the culture of the society will impact on the business in terms of its working hours and conditions and what's permissible and not permissible within the business. For example, employee welfare. That's an important issue, and that will be caught up with issues within the wider society, the legal structure of the society, and the structure in terms of enforcement, I should say. Um, so that there may be laws, and these may be enforced by an agency to ensure worker welfare. There's also the culture of the organisation itself. How does it see the workforce? How does it see the customers, and how does it see its own role within the society in which it finds itself? Is it content with what it's doing, or does it have ambitions to change and to modify its way of working or its product line, or what are its ambitions? And indeed, there's another layer to culture which is often not considered within the literature, and that is the the owners of the business, the shareholders, for example, if they're very united and speak with one voice, which if it's a small organisation, there may be very few shareholders and there may be possible for them to be very united in purpose. They may wish to have a profit maximising business. Their perhaps central concern is making profits, whereas others may have the concern of growing the business, and others may have the concerns about offering good service to its customers, and having an organisation which looks after welfare of the workers and remunerates the workers adequately and generously. So there are different approaches to looking at the organisation that may run right through from the society, from the requirements of the society, the legal structure within which the business operates, right down to the shareholders who may have a particular culture about the direction of the business. The future goals of the business, well, what's the business aiming to achieve? Where does it want to be, and what does it want? And this may influence the structure of the business, because it may gradually start to move around the structures, move around the functions, and compress some of the functions, and perhaps outsource others, and develop yet others again, and so all in preparation for what it wants in the future. So it may have a future set of goals, and it may start to modify, where possible, existing processes to start to move them towards the long run aspirational position. Technology and complexity are always issues in terms of structure. Generally speaking, the more technological the business is, then fewer people are required. There's more efficiency, more perhaps better communications throughout the organisation, better flow of goods, and perhaps even better quality of product, because machines can run to very fine tolerances. But the structure of the business may be determined by technology and by the amount of technology that's in the business, which may of course influence the type of workers required as well. Perhaps more skilled workers may be required to operate more sophisticated technology. Now, the input transformation output model illustrates how the business utilizes resources to achieve aims. So we could start, for example, with the mission of the object of the organization. The mission, this is the goals, the aims of it, the organization. And out of the mission we get the strategy. What should the business do? How should it orientate itself within the marketplace? How should it present itself? What products should it make? How should it market those products? What are the quality issues it needs to address? What about training for the employees? So there's a strategy that comes out of the mission. The mission states very broadly what the company wants to achieve, let's say in a 5-year time period or in a 10-year time period. Then the strategy is starting to address this requirement and start to plot out how that can be achieved. And I've just moved it down here slightly. The objectives. Well, the objectives are much tighter sets of ambitions. These objectives could be quite specific. They could be very specific, in fact. It could be that individual functions will have particular requirements in terms of productivity or in terms of output. So, for example, it could be that the production function needs to step up production by an extra 3% in the coming year. That's a very specific objective. Now, strategy is quite wide. It's based on the mission. These are quite big statements, wide, loose statements, broad statements. The objectives tend to be quite specific, but the achievement of the objectives will lead to the achievement of the strategy. So now we move to the inputs, and the inputs moves to processing, whatever the processing is. It could be engineering processing, or it could be processes within an office to complete a particular task, processes within a company to make sure that the output is produced according to the specifications promised. And that leads to the output. So we've linked here, in a sense, the more technical engineering side with the mission of the organization. Of course, there'll be feedback from the output in terms of measures of success and attainment of the various aims that the organization has set itself. Has it attained what it is set out to attain? So it's the measures of success, and ideally there should be some sort of benchmarking of the degree to which the organization was successful in achieving what it set out to achieve. There are different types of structures that we can identify. There's the functional structure that, in a sense, I've been talking about for the last few minutes. There's also a geographic structure, which we could have a look at, and a matrix structure, which is also worth considering, and a product-based one. So let's have a look at these and see how they differ one from the other. So let's start with the functional structure. Well, here we have the top management, the board of directors, let's say, and then we have the functions underneath: production, marketing, accounts, human resources, and research and development. Now you can imagine, as I said earlier, if it's a very sophisticated organization, a very large organization, there might be many different functions, and production could be subdivided into perhaps many different types of production. Marketing could be split into different regions and different countries, and so on. There could be quite a range of different functions, but they all fit under the board of directors, and each of them have their own functions that they need to complete. So, for example, marketing must have sales, promotion, advertising, probably after care service for the customers, image in the market, and so on. The accounts may have a financial accounting section looking after the trading balance, profit and loss and balance sheet, but also a lot of the financial accounts that subscribe towards the completion of those major documents. And also management accounting, which will look at the cost structure of the organization and look at where costs occur and looking at the management of the organization from a financial perspective. So in terms of function, what we've got here is a layer just under the board of directors of production, marketing, accounts, human resources, R&D, and perhaps many more. And these are the various functions of the organization. Now that's one structure that's commonly used in terms of designing the structure of the business. It could be geographic. For example, the board of directors, and it could be America, and we could have California as state 1 and Oklahoma as state 2. We could have 50 states in America. We could also have North America and South America. We can have Europe. Here I've just listed UK and France. It could be UK, France, Germany, Sweden, Spain, and so on. So there can be different countries under Europe, or Asia Pacific, Singapore, Thailand, Malaysia, Indonesia, and so on. So it could be a geographic structure which simply works out the structure of the business in terms of those major areas. And that's a possible way of designing the business. We also have a matrix structure. So here we have the board of directors, and underneath we have production, research and development, marketing, administration, and so on. We may have many more functions. Just keeping it simple, we've got 4 here. And this is for project 1, you'll note. So under project 1 we have production, research and development, marketing, and administration, which conforms to the 4 boxes under the board of directors. That's for project 1. Now we could do it and say, well, project 2, and again the same headings apply, the same functions apply. Production, which feeds into project 2, research and development, which feeds into project 2. So it's trying to gain economies from let's say research and development, sharing expertise, sharing talent, which could look at the 2 projects. And perhaps the company makes 20 projects. So there might be a sharing over 20, and production facilities would be shared over those as well. That's called a matrix structure. And the product-based structure, well, there's the board of directors, then there's product A, whatever that is, and under product A we have production, finance, marketing, and the various functions, whatever those various functions are. I've only got 3 here, but in practice it could be administration, different types of production, stores, delivery, all sorts of different functions coming under product A. But for ease, just I've got 3 here. And of course we could have product B, so it's a product-based structure. We have the board of directors and product B, again with its own production, finance, marketing, distribution, and so on, different categories that apply to product B. So that's a product-based structure. Now, levels of decision making. Well, management decision making is a business activity which exists on all levels of the organization. So management decisions must apply right throughout the organization. The business has to be run from top to bottom. Even the small decisions at the shop floor level, someone must decide what the decision is and what needs to be done next. Decisions, of course, can be long-term or short-term and depend on maximizing value for an organization. So decisions can be long-term, we would probably call these strategic, and short-term, much more day-to-day type of decisions. So that's a different level of decision making. Long-term decisions require careful consideration and calculated risk. These decisions belong to the managers higher up the hierarchy. So long-term decisions normally taken by senior management. Short-term decisions usually taken by perhaps divisional managers or departmental managers or even line managers. So long-term decisions can involve risk, can be complex. So it's necessary for the senior managers to take those decisions. Short-term decisions, such as decisions regarding day-to-day activities of an organisation, are made by managers at the bottom of the hierarchy, generally speaking. Now, the broad divisions of management. Well, we have the operational management, if you like, the junior management. These are towards the bottom of the organisation. So, a line manager, for example. Then we have the tactical, the middle management. And finally, we have the strategic or the senior management at the top of the organisation. It's also important when we consider business functions and processes to look at culture, because this pervades the whole organisation. It's important to work out what the culture of the organisation is, because it'll help to determine the types of processes and the types of functions that the business undertake. Cultural influences the rate of technological adaptation, for example. Some companies may be very traditional and don't wish to develop a culture of change. So some organizations may be very innovative and may be very keen to adopt technological change. And also working practices. Sometimes workers are organized in very traditional groups, doing tasks in a very traditional manner. Other times they may be trained to use quite advanced machines and quite sophisticated working practices. All again a function of the culture of the organization. According to Jack in 1952, customarily the traditional way of thinking and doing things, which is shared to a greater or lesser degree by all members, and which the new members must learn and at least partially accept in order to be accepted into the services of the firm. So that's what we mean by culture. Companies have particular ways of operating, and for employees to work for that company, they must accept that that is the way it's done. They must accept that that is the management style. Those are the processes that need to be undertaken. If they don't accept it, they don't fit within the organization. Organizational culture refers to the underlying values, beliefs and codes of practice that is involved in shaping an environment, society and self-image of members. So the organizational culture is the underlying values and beliefs and codes of practice of an organization. Culture plays a significant role in the development of aims, objectives, business activities, resources, values, beliefs, and workplace attitude. It's the culture of the business that really determines the mission of the business. What do the senior management want from the business? Where do they want the business to be? That's a reflection of their beliefs, their culture, the way they see the world. So, to that end, culture is almost the driving force behind every business. It's what inspires the business to have a particular mission. And the mission, as I said before, generates the aims of the business, and the aims generates the objectives. And that's how, in a sense, the business fits together. So it's the culture of the business that determines the mission of the business. Culture reinforces code of behavior, expectations, the core of business purpose, the methods in which employees are managed. So the culture is how the organization is run, how are employees seen within the organization, how are the customers seen by the organization, how are the competitors seen, for that matter, by the organization, how are the competitors dealt with, what's the ethical position of the business in terms of greenhouse emissions and the way in which working practices are structured and delivered. How are the products delivered from the business? So the mission statement is dependent upon the culture of the senior stakeholders of the business. That's the source that was quoted throughout this one, this particular video. But that's all we're going to deal with here. This is the second video as a part of this introduction to business functions and processes. As I said, there are many more videos available on this topic throughout the course, and those should be consulted. But that's all we're going to deal with here, so let's leave it at that and say thank you for watching.